All righty, we're answering your questions now. First up, Joey, I have a video question for you.
Hi, my name is Mark Marshall from Sarasota, Florida. My question is carparts.com. After doubling in price recently and having 2 good quarters, the stock is now floundering around 14. I was wondering, is that a victim of the reopening trade or just temporary? Thank you.
Thank you for the question. Joe, what's the answer?
Mark, that's a great question. Yes, it is a victim of the reopening trade. This is a pure play e-commerce auto parts story. They next report earnings on May 10th. If you're long the stock, I want you to put a stop in below the 200-day moving average, which sits at 1393. Let's wait to hear what's going to occur on earnings. And what's really cool about this company, Scott, is they do earnings calls in the traditional sense, and then an hour later, they jump on Clubhouse to talk to the retail investing community.
Oh, okay, that is cool. Thank you for that, Joe. Thanks for the question as well, Mark, down in Sarasota. Pete, a video question for you now.
Yeah. Hi, this is Carlos Manzano from New York City. Thank you for your great show. I would like to ask about Palantir and space. I think they have potential for the future, and I would like to hear your perspective. Thank you.
Pete, you own Virgin Galactic shares, so what do you think?
Yep. I think there's potential for the future as well. The problem lately has been that Sir Richard Branson's been selling some of his stock. ARK Investment's been selling some of their stock. There's a little bit of pressure on the company right now. They do bleed some cash, but they got a great balance sheet, Scott. So I continue to own this stock. I sell options against it. I have since I started owning the stock. I get a lot of premium there, and it gives me a little bit of comfort, at least some downside protection by getting the kind of premiums I am for selling upside calls. But I like the company, and I still think there's plenty of upside.
Okay. Amy, to you from Janice. She says, I hold Chevron, which is 17% of my portfolio. Well, that's a big number. Have $46 a share cost. Hold, buy, or sell. What do you think?
Well, at 17% of the portfolio, I would trim. Congratulations on a great purchase at $46. You've more than doubled your money. I think 17% is a big part of any portfolio, probably too big, so I would diversify a little bit. But in general, we like the energy sector. There's been years of underinvestment. We still think the stocks are attractive. We could have a major summer driving season. So I like the fundamentals for Chevron, but you've made a lot of money, and it's probably too big a percentage of the portfolio at this point.
Okay. Jenny, lastly to you from Art in Vancouver. Hi, Jenny. Saw your Medical Properties Trust pick recently. Thoughts on that one versus Physicians Realty, DOC? What do you think?
Frequently when I research a new investment for the portfolio, I don't look at just one company. I look at that company and its peers. So in this case, I was actually actively researching Medical Properties as well as Physicians Realty. And it was interesting because they're both fantastic stories. Medical Property owns hospitals, Physicians Realty owns medical office buildings. They're both really good businesses, really stable cash flows, great stories. And this is where we get back to what I said earlier in the show, where the story needs to work in concert with the valuation. So here's where they diverge. With Medical Properties Trust, you've got something that trades at 14 times, 5% dividend yield, 6% earnings, no, sorry, 8% earnings growth, 3.5% dividend growth. With Physicians Realty, you've got 0% dividend growth, 4.7 times 4.7% earnings 18 times. So you actually have two great stories, but one that also has a great valuation, and that's Medical Properties. So I would go with that over Physicians Realty all day long.
Okay, story has to match the valuation. I like that. We're going to talk about that a lot. Jenny, thank you. All right.